there's probably nothing I do more important than the mid-month and the end-of-month report card. And this doesn't need fancy software. It doesn't need a complicated spreadsheet. This is Notepad, and this is what I send out to members every day, where we take a tally of what is an open trade, what is a closed trade, and what are new entries. So everyone's on the same page with the alerts that we're sending out in the room. And you can do this with your own trades. And again, all you need to do is just put one line on each of your positions. What did you buy? You don't even need the date, right? We can keep this really simple. What did you buy? What did you pay for it? Because, think about this. If I chase something, right, and this was actually a loss for us, if I had been a little bit more patient and focused on the lower end of the range, this would be about a 400% winner. Now, notice I'm not adding to losers. I just take my loss, small one, and move on. And I find the next trade. And every one of these, you'll see, if they're a closed trade, I show what the loss per contract was, or the gain per contract. Now, the idea is this closed section, especially by mid-month, will likely have most of my losses for my swing trades for the month, because the stuff that I'm hanging on to is the stuff that continues to work, not the stuff that I'm denying is losing, not the hopium trades, but the things that are working, whether that be hood, FLR, things like that. And for example, FLR, I believe, we'll take a look at it here together. I believe it's actually making a new high at the moment. Yeah, it's punching up towards 54. So this will probably be a 90 to 100% second target in terms of premium paid. If you're not doing that kind of breakdown, there's no way at mid-month that you'll be able to course correct. So what do I need to focus on? I might be a little too, we've got a lot of trades on, 18 that we've had. 6 were losses. I'm actually cool with that. I'm fine with that. 10 winners, and 2 right now are unrealized. In other words, they haven't been stopped out and they haven't hit the target. This is where I'm disappointed with July. And I realize it's the summer doldrums. July has been a distinctly different month in terms of follow through than June. But it's really important that the average loss be about 50% of the average gain. That's what I usually like to focus on. And you'll see here, the ratio is not there, right? I should be at either a smaller average loss, about 80, 85 cents, or I should be at about a $2 average gain. And some of that's going to be my entries, so I know I can fine-tune my entries. My entries need to be a little bit more moderate to conservative, because actually a number of the losses that I've taken would not be losses had I waited for the lower end of my automated zone. The win rate's fine. My typical win rate usually kind of on a really good month is going to be somewhere around 75%, not because I'm trading more aggressively or taking profits quickly. The follow through is typically better and the levels just hold. But 62 is kind of at the lower end of what I like to see. So again, I'll chalk that up to a little bit of the summer doldrums, and I'll chalk it up to the way I'm going to adapt to the remainder of this month. Now, in terms of this week, and what I'd love to set up for is thinking about options expiration. How do you trade options expiration? So 2 big ideas in this video. Are you doing a mid-month recap? Are you being very frank about what your returns are and what your entries and stop losses are? That's what I'm doing right now. For me, my baseline expectation is going to be a certain percentage in terms of wins and losses. And those certain percentages really work out to my losses really need to be around 25% of premium paid. My first targets need to be about 25 to 35% of premium paid. That's the first target. And my second targets on average are going to be about 100 to about 120%, 100, 125 of premium paid. And then by the time I get to the third target, I'm usually going to be about 200 to 400%. This is what history of breaking down my trades in this way has taught me. And realize that every one of these is not contingent on my doing anything silly, like adding to losers or being aggressive with momentum. This part is really up to the market. This is the market's doing. This is follow through. That is me. My job is to manage risk and then put myself in a position to get the best follow through. So let's take a look at FLR here. And I'm going to show you something else about options expiration. So FLR right now, this is a trade that is open. It's the 15 August 50 call. So we're in at 50. So you can tell it's obviously a profitable trade. The 15 August 50 calls right now are trading at about $520 or $5.20. I paid $4.10, scaled out once already. I have a break-even stop. So now the question is, where am I in relation to options expiration? So I'm going to pull up the Thinkorswim. Now, it doesn't matter what platform you're on. So let me take a quick break here. I like using Thinkorswim in the room for the charting. All right, Toss is great for charting. TradingView is great for charting. A lot of my trading can happen on TradeStation, can happen on Tasty. I do have a Tradier account. So I have about 4 different options accounts. Why do you have that, Rog? Well, I'm always testing out different platforms for our members, and I'm always seeing which ones I like to put trades on, and certain size trades I'll put in different accounts because these all have varying dollar amounts. So there's not the same account, same brokerage with the same dollars across the board. I'll have different sized accounts. So that's the first thing. So I'll have about 4 different options trading accounts. All right, so let me just use Thinkorswim, which frankly, I don't use that much for order entry. But it's great in the room because it's a nice layout that I can share everything with. So let's talk about FLR. And I'm not going to talk about the 15 August. I'm going to talk about the 18 July because this is the first thing I'm going to have to deal with. And so here's a really easy way with nothing more than your platform's option chain to understand, not Max Pain. I don't use it. I don't believe in it. It's not really helpful for what I want to do. What I'm looking at is a simple concept. Where does price have to close to render the most options worthless? So I'm looking at 18 July and I'm going to ask myself, what is the chance that this FLR gets driven down to 50? Look at the size here. This is open interest. And if they can take 50 out, 45 would be the next target. In other words, these would be close to worthless if on Friday price were to close at or below 50 or at or below 45, right? But probably the biggest win and likely where the greatest number of options are going to be closing worthless is 60. So as long as FLR closes below 60, and frankly, maybe even 50, this is where price is most likely to go. So if we can rally up to 60, I will not expect by Friday, I don't think we're going to move that quickly, but I would not expect price to get above 60 before Friday. And I have to be aware that price could go test 52 or even 50 on Friday because that would tag these 6,400 contracts out. The psychology of OpEx is a Friday, third Friday of the only psychology, where forget the technicals, to a certain part, forget the news. It's really going to be about, again, the simple concept of where does price have to close realistically, right? Sure, we could close at, 37, but is that likely? Probably not. So look at where we are right now, what the closest strike is, and then look at above and below what could tag out, like a ball game, the most number of open interest. And so FLR could be tricky. We could go back and test 50. And if it were to do that, in this case, if we come back to 50, depending on my entry, I have a break-even stop now. And that could tag my break-even stop, which would take me out. So here's my other choice. Do I want to proactively pay myself a little bit more aggressively before Friday if 54, which is where the resistance currently seems to be, would it make sense between now and Friday, between say 53.65 and 54, to have a quicker second target? So I can trail my stop up to the first target and pay myself again. And these are things that I'll consider going into OpEx. These are adjustments that I can make to make sure I'm putting money in my account. These are adjustments I can make to make that average gain, which I'm far more interested in than a win rate. Average gain and average loss. If someone's not sharing that with you, they're not telling you anything, right? Win rate is very one-dimensional. It only matters in the context of average loss and average gains. I'd like to bump that average gain closer to 2, or I need to bring down my average loss closer to about, say, 80, 85 cents. And these are adjustments I'm going to think about as I go through the rest of July. Now, the other thing to think about, and this is where I get into not active intraday or swing trading, but rather, not looking at this information, but rather looking at, especially during summer, and let me know, what is your summer routine typically like? Maybe you continue to trade in the same way over summer, or maybe, hey, Rog, the kids are home from school. We like to go on family vacations. Whatever it is, what do you do over summer? And once upon a time, and this is probably going back before '01, early in my trading career, I would take Memorial Day to Labor Day off, but I would never stop looking at my long-term account because I knew I could manage these things with alerts in about 20 to 30 minutes of time per week. When the volume would drop, when the interest in the market seemed to wane, as the old saying would go, the money goes to the Hamptons, things like that. I may not be as active, but I never had to stop the long-term stuff, right? And for me, the long-term, and let me present this. I was talking about this in the chat room today, and I was mentioning to traders in the MTT room, if you've been at trading for 1 to 3 years and you're not at least at about a 10 to 10.5% return per year. You say, wait a minute, Rog, I want way more than 10%. Granted, but we do know the very frightening and sad statistic that 90% of traders lose. Well, by lose, it means they're making negative results year after year. And it's not that trading is impossible, but in that learning curve where the active trading life is actually not yielding a positive return, right? How can you get a positive return from other dollars that you're putting to work in a long-term account? Well, right now, approximately in my long-term account, I'm about 30%. And I'm not using that as an anecdote. I'm talking about where this particular portfolio that we started in the Sector Secrets Mastery, the long-term growth portfolio, started in fall of 2022. What is it up? And then annualize, basically, what can I look at? And I know there's an annualized column, and I'll add this so we can see what it is annualized. I have a couple losers, right? Things that aren't contributing. And these might be positions that don't make the team because I could free up the capital, right? I could free up the capital and put it to work in better places. So it's a constantly monitoring look where I'm asking myself, is the return that I'm looking at least beating, why 10.5%? Am I at least beating the S&P? Gang, hedge funds don't beat the S&P as a general rule, right? That is the benchmark. That's the holy grail, so to speak, of returns. So if I know I'm doing about 3x of this, I'm on the right track. And it's actually far easier to use the general drift higher in the stock market, historical drift higher in the stock market to your favor while you're learning to actively trade intraday or over the course of days or weeks, the ebb and flow. So put yourself in a position to at least have some positive returns in your trading while you're learning how to actively trade a little bit better. Because again, the bottom line is most traders lose. And I don't want you to be most traders, but I would love everyone to have sort of a cushion, a place of confidence and growth while you're learning how to actively swing trade or while you're learning to actively day trade. And this is, again, a really important part of my life. Think of it this way. I've been doing this in this style since I was about 19. I'm going to be 54 this year. So start to push that out to how many years of, has every year been 30? Some have been more, some have been less. But if I average it out, think about the kind of capital that you can grow over the course of years, if not decades, with an approach that's consistently beating the S&P. And then add to that your active trading, which all of us want, triple digit returns in our active trading, which is absolutely possible. But until you turn the corner and you're not the statistic, right, this is a great thing to consider. Ultimately, however, I think everybody has to, this week anyway, please do a mid-month result tally. And then go check out your options expiration OpEx implications. Those would be kind of the homework, if I could, to do with everyone for today, specifically this week. And then start to ask yourself, am I putting money in an account that has the ability to beat the S&P year after year? And the cool thing is, this Saturday, I have a class coming up. But what I would love for everyone to do first is make sure this is something that's going to fit what your expectations are for your capital and for your trading growth. The class is this Saturday, but on Thursday at 7 p.m. Eastern, so New York time, I'm going to walk you through, if some of you might have joined me last week, and I talked a lot about shares and the mindset. Well, this upcoming webinar, we've got brand new examples, and a lot of folks said, okay, Rog, we talked about share and where your mind has to be for this. What's the next topic? This is not going to be the same presentation. In this next conversation, we're going to talk about leaps and shares. So leaps plus shares. And I'm going to talk about how I manage underperforming symbols in the portfolio. So what happens if something's a loss? So what happens if something is underperforming? How do we determine that, and how do we think about cutting those things so we free up capital to put on those relative outperformers? And again, outperforming has to have a metric, gang. One of the things that hurts traders is this notion that they're going to double an account every month, or they're going to double an account every single year, things like that. That hurts traders, right? I'm all for that kind of ambition. But the fact of the matter is, if 100 folks are listening to me, sad to say, 80 to 90 of these people that are listening, right? May not be you, but 80 to 90% are not making money year over year, right? So if you are returning about 10.5% per year, you are beating the averages and you are in the elite. Now we want to see how much more can we do. So this is really about turning the corner to where, we can have an RTX trade that might be a 200% winner. We can have a hood trade on our swing trade that's a 200% winner. Things like that, while we're also growing a longer term account that's beating the S&P by about threefold. It's a really holistic way of thinking about your trading life. Rather than just being a day trader or just a swing trader or just an active investor, you learn to put tools together that let you do all three. And that's what I've been doing for 35 years, and that's what I'm going to share with you on Thursday with the class on Saturday. You can register at simplertrading.com/long-term growth. So simplertrading.com/long-term growth. All right, gang. So I'll see you in the next video. Make sure you register. Even if you can't attend live, we'll send you out a replay. You can join me on YouTube, wherever you'd like. Bring your questions. Bring some of your symbols. One of the cool things that happened with the last webinars is a couple folks brought me symbols and we broke them down right then and there. All right? Okay, gang. Be good to each other. If you have any comments or questions, leave them below. Smash that like button, and I'll see you in the next update.